Well, hello there, traders and friends right around the world. It is James here with you on this Tuesday afternoon market recap. I told you at the beginning of the week these market recordings would become more routine as I do recover, and today I'm feeling much better, even more so than how I was feeling yesterday, being that Monday afternoon market recap. Because of that, I'm happy to sit down and walk with you through some of these advancements which we are seeing across all three of the US indices. Today, obviously on the Dow Jones Industrial Average and also on the S&P and the Nasdaq, we saw another day of continued selling pressure. The Dow Jones Industrial Average closed down very close to 470 points. Quite a big sell-off which we saw take place on the Tuesday. The S&P 500 down 58 points. And the Nasdaq didn't even escape the selling pressure, down 140 points. What we were speaking about over the weekend in Pro was one of two scenarios which was most likely going to play out. And in this recording, I am going to break down this market and just give you an understanding of the sentiment and psychology taking place in the current market, because I do understand right now the market is full of a lot of fear and pessimism and a little bit of panic, to be quite honest. But in my opinion, it isn't necessarily warranted at this particular moment. The reason why is because, yes, we have broken a lot of critical support areas, but this is nothing more than just a simple retest of the lows which we established in mid to late August 2015. We can see the Dow Jones Industrial Average move as low as about 15,650. And it wouldn't come as much of a surprise. Obviously, right now we're trading at 16,058. We're talking about these lows, 15,651. So we do have another 400 or 500 points lower to go. And if this does play out, it is simply going to be a temporary base for the markets. What the markets will do will act as this location, use this location to act as some short-term support. Very rarely when we move into a correctional type of phase on a market do we simply do something like this. And for me to actually illustrate this on the chart, I need to bring down and work with a lot more price action. But very rarely, if ever, do we simply do something like this. Do we simply just go off a cliff without the transitional process to really unfold before our eyes? What I mean by that is, yes, we can establish once again a relative low, but we are going to act at this location as long-term support. If I change to the 100 and to the 200 simple moving averages, on the Dow Jones Industrial Average, we have seen a death cross take place. Now, again, a lot of media speculation as to the end of the market because of this cross. Simply what this is referring to is that the trend is beginning to essentially change. And what we will do is that we will come back down to the support level and we will see probably a 1 to 2 month bounce take place in the markets. It's not going to be as ferocious as the bounce we saw take place last week throughout Wednesday and Thursday's trading session, but it is going to be overall a net advancement, which should line us up to the end of September, maybe even to the beginning of October 2015. So even if we do sell off another 400 to 500 points back down to the support area, expect this to hold as support and expect the markets, relatively speaking, over the next 1 to 2 months to grind higher. Now, this grind higher is the location of the Slope of Hope rally, and this is where we'd be looking for long-term short options or scenarios, option plays to leg into the market. I do expect this market to come back up even as high as 17,250. We'll just have to monitor this based on where the 100 and 200 simple moving averages are later into September 2015, but I wouldn't be too concerned whatsoever about an absolute market crash. That is it has a very slight possibility of actually occurring. Instead, I'll make this very clear. We're looking for a bounce off from the support level and a slow and steady grind higher, which will be, of course, filled with downward selling pressure days, but the overall net movement of the rally will be up. We'll be looking for this old support level to once again act as new resistance. And this will align very well with the back test of the primary trend on the Dow Jones Industrial Average. If I can show you on the weekly chart, my voice is starting to break down. I thought it was going to hold up quite well throughout this recording, but again, it's starting to fail on me. But look at this. If we start to once again rally back up, it will be the back test of this long-term primary trend line, which has been in effect since the beginning of 2009. I know I keep referencing this trend line, but it is very important. Generally, what will happen is that once you break the primary trend line, you will see the market bounce inevitably. We will come back up, retest the primary trend line, and we will ultimately roll over and fail somewhere around that primary trend line. Not only is this one aspect of technical trading. We also have this very long-term macro support, which now is going to act as resistance. And on top of that as well, I've already referenced the 100 and the 200. Now, just work with me here. Just become a little bit creative. Say in a month's time, we're still obviously trading below the 100 and the 200. Both of these simple moving averages will start to move lower. This will really work quite nicely because there's a very good chance that we will be, or these 100 and 200 simple moving averages will be lower, and they will be poised right around this very, very strong resistance level, which is coming in maybe 400 points below where they are currently priced at on the Dow Jones Industrial Average. The Dow Jones Industrial Average is the first market to officially get that death cross. We haven't seen it on the S&P 500 yet. You can see that we probably will see this death cross take place over the coming maybe 2 weeks. We'll see how quickly this mathematically is calculated and factored into the new 100 simple moving average, which will make the signal line or crossover the signal line of that of the 200. And also on the NASDAQ, this is one in which it's going to take probably the longest amount of time. You can see that the S&P 500 is quite closer to an actual cross other than that of the NASDAQ. So, I mean, all of these markets are in congruency to a degree, but it is just going to have to be a painful period in time where we have to wait to make a very intelligent short. Sure, you can open up short positions right now. We had the 16,250 bearish trade trigger over the weekend. The momentum is still to the downside, but we understand that we are going to grind higher. But if you do take a short at this location, you need to understand that you probably will be underwater in that position until we finally see the rejection and the first establishment of that legitimate lower high. Very, very important that you understand how important, pardon me, that wasn't very well worded, but that lower high in terms of technical charting and structural advancements of the market, this is the most important factor which will usher in a bear market if in fact this is a chart topping process. We do have now the first lower low. We have factored that in, or that has been priced into the market. During the midst of mid to late August 2015, we are going to experience a dead cat bounce in the equity markets, even if that means once again we come back down and retest these lows. But you can take intelligent long-term short positions up at high levels when we do revisit them, most likely in late September 2015. If you want to sleep easy at night, however, just buy some additional time on those put contracts, make that strike price as high as possible, and understand that you do have insurance even if the market does rally higher. You can sleep easy at night knowing that you have insurance or an insurance policy which will cover you in the event that this market completely capitulates and crashes, which again, I will put on the record, I do not expect to happen, not at least for another couple of months. This did come as part of me some form of a surprise. I was expecting this long-term macro support to hold, to see that bounce back up to about 17.8 and then to see the rollover. That is what we were projecting. But as soon as we broke below that primary trend in these macro support areas, the bottom of the market fell out, and this hasn't been an unpredictable event whatsoever. It's hard sometimes to analyze time. It's one thing to analyze price, but it's another thing to effectively analyze time. But right now, these are just forecasts in terms of time as to when we believe the market will make its dash or its rally, its slope of hope move back up to old resistance or new resistance, which was once old support. Pardon me. Sorry, I just had another cough right there. But this is going to be a process which probably will play out over the next month or so. Obviously, right now, the headlines are down 469 points on the Dow Jones Industrial Average. It is the end of the world, so the media is reporting. Again, a little bit of calm and rationale needs to come into this market, or at least into your own analysis, and understand the process of when we go through some form of a capitulation or about a 10% correction. Obviously, there is going to be in the air pessimism and some form of panic and fear, but you do not need to subscribe to those emotions. Just let your analysis guide you. And of course, we do not see the bottom falling out of this market quite yet. We need to see the continuation of the process, the long-term chart topping pattern. We need to see that lower high, and of course the trend then at this particular moment will be in effect once we see the rollover up at these higher levels. So I'm not here to spook fear into anyone. This is just a natural transition, which takes time, but at the moment it's really price which is really striking into the fear or into the heart of the bulls, which have been long-term bullish since 2009. It feels as though the tables are starting to turn. The bears are starting to get the upper hand. However, there will be one final battle, which the bulls will short-term win back up to these resistance areas, but ultimately Supply is going to flood this market up at these higher levels. Everyone who bought for the period of 9 months who is still holding long is going to flood the market with selling orders. That in fact will turn demand and supply. Supply will overcome demand, and you should see very, very strong resistance and selling pressure as this market rolls over at higher levels. Now, I've harped on about this, but I need to make this very, very clear. I haven't been on the airwaves for about 1.5 weeks. This is all changing now that I'm feeling somewhat better. And again, I'm here to walk you through the market analysis in terms of technical analysis as this market continues further in throughout 2015, maybe even into, or most likely into 2016, as this whole market starts to unravel. Until then, traders and friends right around the world, it is James signing off on behalf of Pivot Point Trading on this Tuesday afternoon market recap. I understand downside, in my opinion, is limited. Pretty much at the lows, we will probably set up what we call a higher low, right? A little higher low, and then we'll start to see that aggressive rally or that slope of hope grind higher. Stay tuned. I will walk you through it all. As for now, though, enjoy your Tuesday evening, everybody. I'll be back with you probably on Wednesday. We'll see what the market does tomorrow, if we see the continuation of selling, or if in fact we start to establish that first higher low, which I just spoke about and just referenced right there. All the best, traders and friends. I'll see you next time. Goodbye.